Hey, it's Clay, and this will be a video chart on ticker symbol SOXS. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to this time frame that does a good job of telling the quote-unquote story of the price and then makes mapping out where levels of support and resistance a bit easier to see. I've done this analysis several times in the past, so that is where the green and then our trend line here is coming from. And right now, as far as technical jargon is concerned, it's in the middle of a breakout. The breakout started right there when the price got up above that level. And then from there, it's just kind of a matter of, well, how do you measure the health of the breakout? So I'm going to get rid of that line because it served its purpose. But that does bring out the next question. Okay, how do you measure the health of the breakout? And the easiest way to do that is to just use the purple line right there, which is the 50 period simple moving average. Meaning, as long as the price stays above that line, because keep in mind, that's a moving average. So this line is going to keep on moving higher and higher. So as long as the price stays above a line where the line itself is moving higher and higher, well, that just implies that the price is getting higher and higher, right? That's why I love charts. When you look at them certain ways, they really do insult your intelligence. And I'm not that smart of a guy, so I need something very simplistic like that. But that is what is going on with that moving average. That line will continue to move higher and higher. Therefore, as long as the price is above it, that implies that an overall uptrend is in play. And that also would imply, therefore, that the breakout is still perfectly healthy. I get it. Now, there's a little bit of perspective that comes into this, meaning if you are some sort of day trader, scalper, and you bought right there in your plan, or maybe you bought right there and your plan was to buy and sell within 7 minutes, well then yeah, from that point of view, maybe the chart's looking kind of rough. But from the grand scheme of things, the price still has plenty of opportunity to chip away and build a higher base. To just, even illustrate that more, if you look at where the price has been over time, so this definitely assumes that you care about the bigger picture of things, but within the big picture, you just look at where these lows have been. If you picture these as stair steps, overall, the stair steps very clearly still going in the upwards direction. So again, I get it. If you're a scalper, day trader, and you bought up there, then yeah, maybe the chart's not looking so good for you. But from the grand scheme of it all, the bulls are still very clearly in charge. And as long as the price is above that purple line, that remains the case. And that's also why I'm not even going to bother talking about levels of resistance, because really, at the end of the day, as long as the price continues to build higher bases, then everything else takes care of itself, including breaking levels of resistance. So just focus on doing what it's been doing in terms of building those higher lows and sit back and let the trend do its thing. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.